So the run on exchanges continues, and having a look at the crypto bubbles prices over here, you can see though, nevertheless, despite that, there is still somewhat of a bounce. And here's KuCoin shares. I see one of the top ones that are bouncing, which happens to be an exchange token. So the question is, could this lead to lower prices, and could the run on the banks or the run on the crypto exchanges lead to a liquidation cascade? So those are some of the topics that we are going to cover in today's show, as well as much more. Where could Bitcoin find a potential bottom? Is the bottom actually already in? And when should you begin accumulating for the long run? So without further ado, let's get straight into it. And I wanted to start off with this tweet by Dylan Leclerc, and he says, Bitcoin will bottom when all of the hidden leverage and circulation credit in the broader crypto space is totally wiped out, and the net leverage present in the system is actually skewed to the short side. And he says this was the case in March of 2019 as well as March of 2020. And he goes on to explain, basically on the lookout for a sustained period of negative perpetual funding and quarterly futures in backwardation. And I'll explain all of that means now. And he says, that's my tell that the brunt of the spot selling has probably happened, at least locally, and it's just derivatives that are attempting to push the market down. And then he says, patience. So essentially what he's talking about is you get backwardation and contango. Markets are generally in contango, which means that the futures price of an asset is higher than what the current spot price is, meaning obviously it should appreciate in time. And therefore, in the future, you should be paying more for that asset, hence contango. Backwardation is when the market sentiment for the future is negative, and therefore people believe prices will be lower. Now, typically, as an investor, buying into strong periods of backwardation on price is a good time to be accumulating at least the spot, because usually the market will find a way to rebalance and get back into contango. The other thing that he mentioned over there is the funding rates. And this is what I've covered with you guys. I said to you, one important thing that I'm looking at is for sustained periods on this indicates a capitulation, which is a signal of extremely negative funding rates. And if I just pull this across over here to show you where we kind of at, there is I'll zoom in. I know it's very, very small, especially if you're on a mobile device. So let's have a look at this area over here. It's currently printing pink, but it needs to be sustained. Exactly like he said, that is one of my criteria for finding a bottom. The other criteria that I told you was I'm looking for very, very high volume. And if you look over here by Joe, he says that this is pretty much the highest volume on Coinbase in history. The previous high marked the March 2020 low of 3,858. And this will likely mark a generational bottom for Bitcoin if you do look at the volume profile over there. One thing that I want to say is I don't think that the negative funding has gone negative enough or held there for long enough. I don't think the backwardation has been there for long enough, and therefore the volume could go higher. But time-wise, we are nearing the end. Timing-wise, this should play out relatively quick. But as for price-wise, how much more down could we go? And the answer would be a lot. And if we look over here at the volatility indicator, you can see that it is picking up off of that zone. Again, I'll try and zoom in. Can't do it on this chart over here, unfortunately, but you can see that the white over there, the white line has reclaimed above the orange horizontal, and that means that the etchings of this move are underway. You could expect that over the course of maybe the next 2 to 3 weeks, the rest of this volatile, expansive move will take place within crypto, and that should find some sort of a major bottom, at least for the time being. Whether it's a macro long-term bottom, I'm not sure. I would like to think that this major bottom that we're about to have will be the macro long-term bottom that we've been hoping for. And as you guys would know, I've been eyeing out for a very, very long time in between the region of 10 to 12K. And we'll get into those price levels in just a moment's time. You know the weekly chart. The weekly chart, we can now move the ranges over here. We have a new weekly range. So all you need to do is readjust, take it down to the weekly low. Let's just put our magnet on, and I'll do this for you guys right now. Then we got the open, which is over. Let me just grab that one first. Weekly close on the bottom over here. Weekly open, and the weekly high is pretty much in the same place. So as you can see, we're now working with an enormous range, and in the midst of a capitulation, you would expect that, but don't think that we're going to stick within this range for very long. I would anticipate that if the capitulation is to continue, we're probably going to have follow through throughout the course of this week, and maybe this would be the worst that we would see throughout the rest of this week. So I want to also touch on this chart, definitely one of the most important charts, and I'm going to line that up with something else. We did outline the primary ranges which the market has been in over the prior year. So you have range 1 at the top here, range 2, which if Bitcoin reclaims above $19,000 this week, and holds there, then you can pretty much say there's a good chance that maybe the bottom is in. And then as a trader, you start to target towards mid-range of range 2 at 25K, and then the top of the range, which is coming in at 31,500. However, as it currently stands, we're stuck below the mid-range over there, and you'd be looking towards the bottom over here at 11K, which is mid-range of range 3. I know I'm saying a lot of things over here. So very, very simple. You have this range over here. This is mid-range of range 2. You have this range over here. This is mid-range of range 3. This is the area which we're playing within, and you can expect that's probably how you're going to see price react. And I showed over the last stream that I did, I think it was on Friday, an ideal scenario would be if you saw price continue to come down, and then you want to see a deviation below the range. Maybe you tag as low as 8K over there, recapture that range, and then start a new accumulation phase. That would look very, very good for the long term. But as you can see, price-wise, that would still mean that you're targeting much, much lower prices. First and foremost, you're looking at 30% down to the mid-range of range 3, which is that 11, 12K region. And then if you were to deviate below that, you could potentially go down as much as another 40 to 50% to get below that level. Targeting lower than that, I don't even want to talk about that yet because I don't think it's relevant. But I did want to bring up this chart by Trader XO, and he says, simply discuss. He's outlined a key horizontal level as well as a diagonal trend line, which is a good matchup. And then he's also shown the similar thing, which I just showed, which is the Wall Street cheat sheet, but he's got a little bit of a different perspective. So let's quickly zoom in on this and get an idea. So you have the average, the mean, which he's related to his diagonal trend line over here. Then you have pretty much takeoff, bear trap, media attention. So it's the same thing as the Wall Street cheat sheet cycle that I've shown you. Price goes up, you go through all of this phase, bull trap, fear, capitulation, and then you go despair, where you fall underneath that mean range over there. And when you look at the other chart that he's shown, now this one has the price levels on. If you look at this, very simply put, you have a key horizontal level coming in at $8,000, and then you have a diagonal running from 2017 bottom to the 2019 bottom to the COVID bottom, and that would line up worst case scenario coming in the region of $8,000, and that is definitely still a possibility. So to put this into perspective and put my own line in over here, it's essentially this is what he is looking at over there. And you can pretty much just line that up. I'll put this in 3 points over there, and we'll put it in yellow, and we'll leave that as a potential area of interest. Now, again, looking back to what I just said, price sells off. You have a deviation below the range 3 mid-range level. Tag 8,000, come back up, recapture that, and then recapture above into range 2, and then a new bull run could start. And this is a real possibility. You have to open up your mind for the potential of something like that happening. And if that were to be the case, you definitely want to start accumulating over the next 3 to 6 months. Have a bigger time horizon, maybe 18 months, but expect that there's a potential that the worst damage will be done over the next 3 to 6 months. And the reason why is this chart over here. And I also showed this on Friday, descending triangle. We have broken it down. This is on a weekly chart, so it's high time frame, meaning that it will have a decent hit rate. It's a solid pattern with the descending triangles. They work out very, very well. The question is this little push-up that we're having right now as I speak, how high will this go? Will it manage to get all the way up to the bottom of the triangle at about $18,100 again to retest that as resistance, reject off that zone and continue to the downside? Or do we just have straight follow through in the same way that we had in 2018, which is on the left-hand side over here. That was November 2018. Timing-wise, look at how close this is. November 2018, the following week on the 19th. So this one was the 12th of November 2018. Next candle, 19th of November 2018. Price continued to sell off, small bounce, and then we finally capitulate around the 10th to the 17th of December. Now look at this candle over here. Monday, the 7th of November. This week that we're going on is the 14th of November. Very, very similar, almost scary similar. So therefore, you want to be accumulating. And with the kind of run on exchanges, one good alternative, if you are extremely fearful of your exchange, is Biswap. This is a DEX, a decentralized exchange, whereby you can swap tokens. The fees are cheaper than Uniswap or SushiSwap or PancakeSwap or any of these swaps. You're getting half of the fees back rewarded to you in the BSW token, which you can use at a later stage to sell if you do wish to do so. So have a look in the description below. There is a link over there. If you do wish to use it, make sure you use this link. Do not Google this because you don't want them to siphon your funds from your MetaMask by going to a fake account. So click that link below. Moving on. Okay, 4-day chart. Still telling us to be fully short. Essentially, you would using this is for an investor. Short-term moving average, medium-term moving average, and the purple long-term, all angled down with price stuck below each one, with the short below, the medium below the long. That is a scenario where you don't want to be exposed to the market, and you could expect prices to go much, much lower. But if you start to see the capitulation taking place, you have to understand there is going to be a mean reversion trade from that, and therefore you want exposure into the market in the longer term. It's a good investment area, not financial advice, but it is. Okay, 3-day chart. 3-day chart has closed with our inverted chart over here. We had the higher low confirmed. Now we have the higher high officially confirmed as well. So I'm going to take this. Now, any bounce that takes place from here is simply just a bounce. You have essentially what they call a swing low. If I put the chart the right way around, this would be a swing low. Swing low implies that you're going to have continuation, meaning prices have closed multiple days lower than any of the previous candles, and that implies continuation. Since it's an inverted chart, you would be calling this almost a breakout to the upside. So you'd be looking at something like this, maybe a small pullback, a retest again into that 18K level. And then if you were looking at any other chart towards the long side, that is exactly how you as a trader would probably be playing this. You would be looking as cool, a break of structure, retest that zone over there, the strong horizontal, and then you buy and expect prices to go higher. In this case, obviously low because it is inverted. So I'm sorry I can't sugarcoat it, and make it look all pretty and beautiful. The reality is that it looks bad. And when you tie in with the stock market, it could make it look actually a whole lot worse. And the reason is this, because the stock market has been caught in this megaphone pattern over here, expanding megaphone pattern, but to the downside. And it is coming directly into a zone where you would expect resistance to be found. And we outlined this as well on Friday. We put this as our circle. Remember, we took the trade opportunity on PrimeXBT, also one of these sponsors. We outlined the purple zones over here as an area to watch for the S&P 500 to start to get faded. So any sign of weakness within this zone, and you'd be looking to short this level, and you want to fill this inefficiency candle, which is coming on the left-hand side. So I'll be paying close attention to this over the course of the next few days, because the stock market could potentially push up a little bit higher even over the next couple of days. And that would give you an opportunity to go short on crypto, filling the inefficiency candle over here. Crypto is obviously going to suffer a lot worse. With that being said, I do want to say that I do think that crypto is kind of front running the whole market, because there's not really many artificial means of propping up price in the way that they do within traditional markets. And therefore, maybe crypto will bottom before stock markets actually do. And that means that consequently, crypto would also recover first. Now, the only bullish hopium case is, again, the DEXI, the dollar index. You can see breakdown is real over here, but it is going to catch support at the 200-day moving average, coming in at about 104.8. Now, this bounce will also not be good for crypto, but it gives you the final opportunity to buy the dip, in my opinion. So you see a strong sell-off like that, bounce from anywhere within this region, and then this entire push up on the DEXI, when the DEXI rallies, it's going to hurt crypto even more. But that gives you the opportunity on the next lower high, wherever that may be. I anticipate somewhere around this 100, between 108 and 111. I'll be looking for weakness on the DEXI, and this would be your zone to look back at crypto and see where is crypto when the DEXI reaches this area. And that would be your potential opportunity to pick up some really great long-term positions that you could hold for a number of years. So that I am talking more towards the longer-term investor. You really want to start paying attention now. And I will, of course, let you guys know everything. Follow me on Twitter. The link is in the description below. In the Discord group, there is a link below as well in the description. I will definitely let everybody that follows me know when I do start to allocate capital towards crypto, of which I have not done yet other than my dollar cost average positions. But this could be the zone. So I'm paying close attention to that. Now, another area that kind of scares me, or thing that scares me, is still this, the VIX. So the VIX continues to go down, and it works like a spring, guys. It's like a spring. You squeeze the spring down, and when you eventually release that, then, of course, volatility comes into the market. Now, typically, a VIX increasing is a stock market that's decreasing, which means it's a crypto market that's decreasing. And this has been going down pretty much since October. So for an entire month straight, the VIX has been contracting, meaning when you do get that next expansive phase, the stock market is going to probably sell off quite hard. And judging by the levels that I'm looking at, which I just outlined to you, it looks like it could be quite close by. And that is going to be quite scary for the crypto market. It's going to really hit it quite hard. So with that being said, be careful, be cautious out there, come with a plan. The safest thing you can do right now is dollar cost average. It's pretty much the best plan. You're going to probably outperform the majority of traders, because at these levels is where people begin to get liquidated. So trading the stock market may be one of the easier things to trade right now if you do have itchy fingers as a trader. If you do want to check out PrimeXBT, there is also a link that is in the description below, and you get access to sign-up bonuses. Make sure to use that link. It will take you through. As far as I know and what they've communicated to us, they do have their reserves, and they will basically be putting something out. I think it's called a Merkle report, where they'll be proving, all of our sponsors will be proving that they do have the funds to the capital that they say that they have on exchanges, and therefore hopefully they don't run from our exchanges and nobody gets rugged. But with anything out there, there is risk involved, so keep that in mind. Okay, one-day chart. Again, same thing. It's showing the same thing as everything else. Moving averages are turned down. Dangerous environment. The best case scenario is a pushback into this zone over here. That would be a great shorting opportunity for the final leg down. So keep an eye out on that previous range low, which is coming in around $18,200. Next chart over here, same thing. If you look over here, primary range, moving averages are coming in. This one will be moving down. The 200 works very well on the 4-hour chart as a general guide for where price is going. You had the death cross over here. All the moving averages, or exponential moving averages at least, cross to the downside, angled down. This moving average will probably meet up with the range low over the next day or two. And like this, let me just show you. So this is tracking down. So over the next while, if price comes up over here, it's going to meet up with the range low. That's an area to go short from. So keep an eye on that. Get out of your positions if you are stuck in positions that you wished you weren't in. That would be your zone to do it, 18,000-ish level. But keep in mind, things change very quickly. If you reclaim that and you hold above that level, $19,000, that would actually activate a long opportunity for the range traders. So what about short time frame, 1-hour chart over here? This is essentially what I've identified. I'll zoom in over here. Let's look at it. Okay, so we had the lows over there. the wick low came to 15,600. What you want to do is take a horizontal candle on the hourly level. You want to take it from the open and closes, so the body of those candles, run it all the way across, which comes to where pretty much price just reacted, is at 15,800. That is now your range low. You then want to take it to the range high, which is going to be this level at 18,114. Now, take your fib, and you want to mark out where is the mid-range. So let's take it across. Grab our horizontal over here. So mid-range is coming in. There we go. Let's just make that smaller. And we can take that off. Mid-range is coming in at 16,958. Let's have a look at our price reacts over here. If you want to get an entry into a trade, well, firstly, unfortunately, I wasn't able to go live in time, but that would have been your long signal. You'd be taking your first take profit in the mid-range over there. Your second take profit, you'd be taking at the range high at 18,000. So it would look something like that. Alternatively, what you also want to do is see how price reacts over here. If price comes above, and then on a low time frame chart, 15 minutes, starts to lose that mid-range, which is at 16,958, and retest that area as resistance, that would be your signal to activate a short with your stop above over there, wherever price may be, and you'd be looking to short back down. I don't know where that holds this range. It might, playing out the way 2018 did. Who knows? We might be stuck in this range over the next couple of days, and then maybe only next week or the week after do we continue to fall through the floor into going into December. So that's it, guys. That is pretty much the price action for you. FTT token, I don't know, I probably wouldn't touch it. I also know that with the crypto.com, so I think it's called Crow or something. Crow is the ticker. Also looks bad. I don't know. I don't want to waste time on it. Bitcoin's kind of going to drive the entire market. That's what I'm looking at. That's what I see within the charts. If you appreciate these videos, the short form content, only under 30 minutes, I'll try to give you everything. Give this video a like. I would appreciate it. Also, hit the bell notification so you can be notified anytime I do go live, and subscribe to the channel. And then, again, a shout out to the sponsor for the day, PrimeXBT. If you do want to sign up, use the promo code Kyledoops. And if you are fearful of the exchanges at the moment and you want to go offline, then pretty much Biswap is a good alternative option. So that is it from me. I will see you all on tomorrow's video, and I'll be active on Twitter today as well as on the Discord. Let's see what today's price action brings us. Cheers for now. Thanks for all for watching. I appreciate each and every one of you.